United Health just reported their earnings, so let's go ahead and take a look at what they reported. We're going to be taking a look at the intrinsic value of the stock and see if it be a good add to our portfolios. If you've been following investing closely, you know that one of the greatest investors of all time, Warren Buffett, recently invested in United Health as well. As you can see here, they bought about 5 million shares at an average reported price of $311.97. Now, this did shake up the market a little bit. Before he bought it, the stock was around the $280s to $270 mark. Then they reported their portfolio holdings. Everyone saw that they had bought United Health, so the stock went up a little bit. Now the stock continues to go up because of the earnings as well. As you can see, they reported earnings today, the 28th of October, and they beat both on EPS and on revenue as well. Now, if we take a look at the Wall Street analyst rating, obviously we should invest based on our own opinions, but these people tend to know what they're doing. If you take a look at what Wall Street thinks of this company, they consider this to be a 4.07 out of 5 buy, with 14 strong buys, 5 buys, and only 2 strong sells, with the rest being hold. Before we take a look at the intrinsic value of UNH, let's go ahead and take a look at the dividend. They have a dividend growth of 15 years. That means they have been growing the dividend for the past 15 years. They have a 5-year growth rate of 13.09%. Usually anything above 6-8% is very good, especially with a payout ratio so low as 33%. Most dividend paying companies have a payout ratio above 70%, at least most of the ones that pay a lot in dividend. And as you can see, the dividend yield is 2.42. That means you're going to get per share about $8.84 a year. Now we're going to be taking a look at 3 different case scenarios for UNH intrinsic value. We're going to look at the worst case for the company, the base case, sort of like a median, and then we're going to take a look at the best case as well. This isn't the exact intrinsic value, but as you can see, the gray line right here is what the stock should be worth throughout time, and then this right here is how price has been following. As you can see right now, it's considered to be under. So let's go ahead and take a look at some of the financials and see if it's worth investing in this company. Now, as we just saw, they did report positive earnings, and if you've been following the channel, you know that I like to invest in companies that they have divergence between their EPS and the stock price. As you can see, that was some of the case here. The stock was dropping even after they're reporting earnings on April 10th, and now they're reporting not as much as April 10th, but definitely more than analysts were expecting. As we just saw, they beat their earnings. Price has been following on a little bit, but usually price tends to be very close to the EPS, and as you can see here, that is not the case. So this could mean that UNH has some upside potential to go. Now, if we take a look at some of the financials, we can see that revenue is up about 8%. Everything else is down just because everything that's been going on with the company, what happened with the CEO, with all the lawsuits. So there's definitely some risk with this company. However, I think in the future, they will be just fine. Also, I like to invest in companies that have more assets than liabilities. That is definitely the case for UNH. Also, I like to invest in companies that have more assets than liabilities. That is definitely the case for UNH. As you can see, they have 308 billion in assets and only 208 billion in liabilities. Now, this right here is not the actual intrinsic value we're going to be taking a look at, but this is what analysts are forecasting for the stock to be worth. As you can see, the lowest forecast is that this company is worth about $199. The average forecast is that it's worth about $348, already past that at the current price. And then the highest forecast is that the company is worth $710. Now, the company does currently have a buyback yield of 1.5%. This means that the company believes in its own self. Management believes in the company. They believe that the prices that the stock is currently at is low, so they're going to continue to buy this company at lower prices to hopefully make some income in the future. This is usually a good sign when investing in a company, especially with such a big company like UNH, probably the biggest or one of the biggest health companies in the United States and in the world. So the fact that management even considers that they're buying back their own shares as well, especially with the numbers that we just took a look at, it just sort of gives me a little cushion that maybe this is a good investment. But again, you should do your own due diligence. Now, what you've all been waiting for, the intrinsic value, we can see that a base case for the company is that it's currently undervalued at 21%, meaning the stock is worth about $478. The worst case, the company is still undervalued at 1%, meaning that the stock could be worth about $382. And the best case scenario, the company is currently undervalued at 45%, meaning that the stock could be worth $688. Now, keep in mind that year to date, the company is down about 34%, which that equates to about $197. And year to date as well is down 27%. However, if we take a look at the max history of the chart, I mean, this company is up 118,000%. It's definitely a drop. You know, as they say, buy the dip. Maybe it's a good idea, maybe it's not. I'm not too sure. Investing, you know, it's a game that you have to play. It's not gambling. If you do your own research, you have a little bit of better odds, but it's very similar if you ask me. I mean, the PE ratio is beautiful at only 15 on a 334 billion market cap company, paying you a dividend yield of 2.40%. And this is the earnings that they're estimated to do in Q1 of 2026, and then moving on of Q2 and Q3. Also, the annual EPS estimates for December of 2025, they're estimating 16.08, and at the end of 2026, 17.62. And for the revenue, same thing, ending of 2025, 441 billion, and ending of 2026, 466 billion. What do you think of this company? Do you think this is something you would add to your portfolio, considering all the risk and also considering all the upside? Are you willing to bet on this company? I would love to hear your thoughts in the comment below. As always, guys, if you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and I'll see you on the next video.